Hey, this is Matt from InvestiQuant. Today is Thursday, May 20, 2021. This morning, we saw the markets gap up and then take off to the upside in the NASDAQ and the S&P. The Russell and the Dow were a bit weaker initially off the open, but they have since reversed and are trading up near their highs as well. So we are seeing some strength today ahead of tomorrow's options expiration day. And we're going to take a look at what that has meant as we head into the close this afternoon ahead of tomorrow's options expiration. So let me go ahead and set that up here in Discover. We've got all four instruments selected. We're going to use an entry time of 3 p.m. set up as a long, and it'll exit at the close, which is 4:15 p.m. Eastern time. Now, for the price action, what I want to include for this is simply saying that we are trading above yesterday's high at 3 p.m. Eastern time. Currently, that has taken place everywhere except for the Russell, which is right on the edge of yesterday's high. So I'm going to say that the 3 p.m. price is above yesterday's high by using this filter here in the intraday close versus daily levels category of the post-open filters library. Next, I'm going to go into the market events section. I'm going to say that is the day before options expiration. That is found within this category here, day before market events. I can scroll down or I can just grab it from the active today section. I'm going to click right there to add it to the test. And then lastly, I'm going to put it in a similar market environment. And that's very important for this study. Learned a little bit here as I was looking at this study just a few moments ago that it is very different if it is above a 10-day moving average versus below a 10-day moving average. So I've got that selected. Now we can click View Results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at the close, which is 4:15 p.m. Eastern time, when you are trading above the prior session high of day at 3 p.m. on the day before options expiration day. This is taking place below a 10-day simple moving average, but above a 200-day simple moving average. Historically, we've only got 14 samples to look at here in the S&P dating back to 2003. For the NASDAQ, just 17. For the Dow, 13. And for the Russell, 14. So we do have fairly small sample sizes here. The win rates on these are mostly weak. So you got the S&P coming in at 36%, the NASDAQ 41%, and the Dow 38%. The Russell is the only one that is dead even at 50%. The other three are a bit weaker. If we look at the average win and average loss, you can see the average win a little bit bigger than the average loss there for the S&P. That is also the case for the NASDAQ, Dow, and Russell. So all four of them, the average win has been a little bit larger than the average loss, but the win rates on 3 out of the 4 have been weaker. Now, I looked at this pattern with several different variations in a similar environment, and they were all fairly similar, that it has been a little bit weaker when you're in this similar environment of below a 10-day simple moving average, but above a 200-day simple moving average. What was interesting, though, when you look at it in stronger bull markets, this afternoon period is often very strong. So we're currently below a 10-day simple moving average based upon yesterday's closing price and above a 200-day simple moving average. But in those bullish environments where you're above both, it's quite a bit stronger. Some of them get into the high 60% win rates depending on some of the variations that you look at. So quite a bit different here in this current environment versus the bull market environment. But hopefully you found that helpful. Good luck today, and we'll see you next time.